Good afternoon, everybody. This is your market update for November 30th. I hope that you're having a great day. So stock market yesterday afternoon actually sold off in the afternoon and gave up much of the gains that it had earlier in the day. Did open higher this morning across the board, and the Dow has continued to climb, currently up about 335 points. Unfortunately, the NASDAQ and S&P 500 have both turned negative. NASDAQ is currently down 103 points. S&P 500 is currently down 4 points. Mortgage-backed securities closed out the day yesterday up 12 basis points, so off of their best levels of the day, but still a positive close, which is great. Running into that overhead resistance of the 200-day moving average, it is a pretty stiff overhead resistance level. It's going to take something convincing to break through it at this point in time. I think we did have some economic information come out today that I was hoping was enough to push us through that, but it pretty much came in line with expectations. The initial jobless claims report, which is the unemployment claims filed last week for the first time, came in at 218,000 claims filed, which was up from the week prior, but just slightly below expectations of 220,000 unemployment claims filed. The PCE report for October, that personal consumption expenditures report, which is that key measure of inflation that the Federal Reserve looks at very strongly, pretty much came out in line with what was expected. The inflation numbers were pretty much flat month over month. And if you looked at numbers year over year, they did decline by about 0.4% down to 3% for an inflation figure. But again, that was in line with expectation. And core PCE numbers also came out in line with expectation. So not enough to make any significant movement in the market today. Mortgage-backed securities are currently down about 10 basis points. So mortgage rates did come out. The published 30 and 15-year survey from Freddie Mac came out earlier today. Did show that for the fifth consecutive week, mortgage rates have declined, which we expected. The 30-year nationally is currently sitting at 7.22%, and the 15-year is sitting at 6.56%. So certainly some significant decreases over the last 4 to 5 weeks from what we saw. We were pushing basically 8% there for a brief period of time. So like the direction we're heading, hopefully it continues. I'm not sure we'll update you tomorrow, as there's not really any significant information coming out tomorrow. If there is, for any reason, any volatility in the market, I will update you. Otherwise, I will see you on Monday.